Good afternoon, everyone. It's Alex Suslov, Head of Capital Markets at AD Mortgage for our AD Weekly Digest. And as you know, we always share at our Weekly Digest most recent market news for the economy, for mortgage markets, for housing markets, and for non-QM programs. On non-QM market, we see more interest from our partners and our borrowers in short-term rental opportunities. And we're looking on the ways to best implement short-term rentals on our DSCR product and the valuations for those in order to properly evaluate the cash flow that property owners may receive from short-term rentals in their communities. And going back to economy, we're happy to have here with us Billy Abrams, CEO of ADM Securities, to give us a market overview. Billy, can you give us a wrap-up of the past week and the coming events for the next week and next month?
Hello, Alex. Alex, by my count, there were 15 scheduled economic releases this week, 8 of which came in on the market unfriendly side of the guesses, and 7 of which came in a little bit market friendly. So overall, slightly bearish. If you'd asked me before the week began what were the most important scheduled releases, I would have said durable goods on Wednesday, which has 2 components. One of those came in bullish, one came in bearish. Thursday, I would have said GDP was one. It came in a little bearish. And I would have said the most important one was Friday's PCE, which came in a little bullish. So the news was at best mixed to a little bit bearish. But the markets didn't so much go that way. The markets yields were up as much as 15 to 20 basis points since the last time I sat here. So they got quite a bit softer. I think part of that's technical. I think the patterns look bearish and look like yields are headed higher. I think the 10-year had a very important technical level, about 291, 292. Once it broke it, and it did it by jumping over it on an opening one day. It closed one day at 289 and opened the next day at 295, and it's not seen 295 since. Probably the most important piece of news coming into this week we knew was going to be Chairman Powell's speech from Jackson Hole Symposium. What he said was nothing new. He told us that to the Fed right now, inflation is more important than growth, that they will fight inflation by raising rates, and once they get it to an acceptable level, they will hold rates there. And so there's nothing about that that doesn't suggest that we're going to see Fed funds pushing 4% around year end. And with Fed funds around 4%, we're probably going to see the 5-year and the 10-year back in the neighborhood of 3.5, where they were in June. And about the only thing that could keep that from happening would be a yield curve that inverted more and for longer than any we've seen since 2000. The 2-year is already back at 340. It was only around 345 in June. So the short end of the curve is under pressure. I expect the 5-year will follow. I expect the 10-year to follow. And going forward, next week, we've got the jobs report coming on Friday. So we'll see where things go from here. If you'd like to get my daily updates, sign up, send me an email, and I'll be glad to put you on the list. And with that, I'll kick it back to you, Alex.
Billy, thank you so much for the overview. It was great as always, and I absolutely agree. It's very hard to predict anything for the near future with a high inflation number and Fed trying to figure out the best way for them to act in order to fight the inflation today. Thank you, everyone. It was Alex Suslov, Head of Capital Markets at AD Mortgage for our AD Weekly Digest. And make sure you guys sign up to Billy's daily updates. Those are great. Here's his email, or here's his email, or there the email. Make sure you sign up to those. I love those. Those are great. Thanks.